Well, now we want to take a look at this entire terminal window. Those calculations we discussed about balance, equity, margin, free margin, and margin level. In a trade, how does this relate to the leverage of our account? Here, as we said, we can open the terminal window using the Ctrl+T shortcut or from the View menu. So in the terminal, what we see in detail is a balance in dollars and equity. That same floating balance, free margin, which means available margin. All right, guys, right now we don't have any open trades. If the balance is $4,900, well, let me be precise. It's $4,908.72. This $4,900 is the balance. The equity, since there are no open trades, is equal to the balance, which is also $4,900. The free margin, which is the available margin, is also the same $4,900. So when we don't have any trades open, everything is equal. But let's open a trade. For example, let's place a buy order here. Now, does the lot size change at these prices? Okay, now here, our two terminal windows show this. A complete barter method on our two terminal windows. So what exactly has happened here? Well, first of all, if we look closely at the order section, it has clearly shown us the specific order that we just finished placing. It has written the order number, then it has recorded the time, hour, date, and day, and whether it's a buy or sell. It also shows the size. With what volume did we enter this trade? On which symbol are we trading? The entry price is 1966. The SL and TP, which we haven't set yet, and the current price is 1966. We entered at 66 cents, and now the price is 66 cents, just a little bit lower, which is shown here, indicating that we are in a negative position. If the account type charges commission, we can see it's commission. If it's commission free, then we see it's spread. We also mentioned swap, which is the overnight interest. If a trade stays open for a day and our account has swap, meaning it's subject to swap, we can see the swap here. Okay, this should have been written above, but let's move on to our balance, guys. The balance never changes, right? There is no change in the balance. This is our initial balance, which is the same as our available funds. But do you remember equity? We said the balance is floating. That means this amount, $4,908. The profit and loss, positive or negative, that we see here. Guys, right now our balance is $4,908 and we're $9 in loss. So our equity has become $4,896.97. It's floating, as you can see. Whenever the loss increases or decreases, it shows up here. Look, it went from $4,908 to $4,904, so obviously it dropped from $8 to $4. It keeps going up, and over there it decreases. We can check it together for a few more minutes to see if it drops more or goes up more. It dropped, we can watch another round together. What about the margin? The amount of money you need to enter this trade out of the $4,901. We were supposed to deposit it with the broker as margin. Look guys, it's the same $728.06 you have. Only 5 cents was enough for us to be able to trade 2 lots on global gold ounce. Guys, 2 lots is equal to 1 lot, and 1 lot is 100,000 US dollars. How much is 2 lots out of 100,000? Look guys, 100,000 is 1 trading lot, right? Multiply by 2 lots, that is $20,000. It is as if we wanted to enter a gold trade with $20,000, and for this $20,000, all we needed was a margin requirement of $7.8 at most. Let us see. Guys, right now we're up $4 or $5 in profit here. My equity has become 4,915.7. We're in profit, yes. We had a total balance of 4,980 at the moment when we were losing, and it was decreasing from this amount. Now that we're making a profit, we're up $7.80 in profit, and it's being added to this 4,980. Let's see, you have $4,912.13, right? So when we're in profit, this equity means the floating balance. Look, it starts at 4,915. Why? Because we're currently up $7 to $8 in profit, but our balance is 4,980. Look, it's reached 24, 25, 26, around $20. We're in profit and the equity keeps going higher. How much margin did we need? Our required margin was $78, right? So even with this lot size, we only needed $78, and free margin means what's left over. Free margin is $4,843. Here, our free margin means our available margin, and our margin level is shown as a percentage. If it drops below 70%, the broker, like the one we're working with now, will margin call us. Guys, look. For this same trade that we opened and talked about closing, all you need to do is click on the X. For example, although we usually set a take profit target, let's say in this case we wanted to manually close our trade. Okay, we close this trade, and now in our account history, for example, we can find this trade. Take a close look right here. It clearly displays the specific trade number, the exact time and date of the transaction, and it also confirms that the trade type was listed as a buy order. The volume was 2 lots. It was on gold. We entered at the price of 1,966.34 cents. We didn't set a stop loss for now because we were demonstrating, and the closing time was also 16:09. Just today, at 16:09 we opened, and at 16:21 we closed. So what's the difference between these two times, from 16 to 21? That means we were only in this trade for 5 minutes. In 5 minutes with $78. From the margin we used, we made a profit of 20.80 cents. $20.80, guys. 20.80, right? Let's say we just catch the trend, $20. Look, today the dollar rate is 27,000 tomans. So our $20 is 540,000 tomans. Just in these 5 minutes, we made a profit from the market. I mean, the income in dollars was $20, but at our exchange rate, of course, let's take that into account too. We only traded with a volume of 2/10 of a lot. If that same 2/10 had been a full lot, how much would $20 be? It would be 5 times more, $100, which means 2,700,000 tomans. So it was 2/10 of a lot. We made $20, but at today's rate, that's worth 540,000 tomans. But in just 5 minutes. This type of trading is called scalping or short-term trading. Okay, now we're getting familiar with the terminal window. In this section, we can see that the balance, equity, and free margin are displayed. Right now, the trades are closed again. At that time, we had $4,908. Now we have $4,928.92, and all of these show $4,928.92. We were able to have exactly this amount in these, so you saw how our balance increased. When we were in the trade, it was $4,928, but at that time it was $4,908. When we were in the negative, it was decreasing. It went higher and increased more. We closed the trades, and all of these, along with the profit we made, caused our balance to increase with the margin that was considered. We also got familiar with 12 and 78, and guys, this margin depends on the leverage of our account. If we want to see our account leverage, of course, when we are opening the account in the broker, the account leverage is something we choose manually ourselves. We explained it fully in the broker section, but if, for example, you want to know what someone else's account leverage is, you can easily find out. In the terminal section and in the exposure section, what do you do here? You can see your available balance and your volume. You have $4,928.92. But how much can your trading volume be? Up to 2,464,466. That is, up to 2,464,466 you can trade. You trade this amount, which we divide by $4,928.92. We are working here with a leverage of 1 to 500. So what happens in every trade we enter here? We put in 1 part, and the broker puts in 500 parts. So if we want to enter a trade of 100,000 units, meaning we want to trade 1 lot, how much money do we need to have? That means $100,000, which is 1 trading lot, divided by 500 equals. $200 is the amount we need to have. With a leverage of 1 to 500, just $200 is enough for us. The broker provides 98,000 of it, and the rest up to 100,000 is our own money. So guys, let's see. When we write here 100,000 minus the $200 we put in, that's $99,800. The broker puts that in, but they don't share in our profits or our losses. You can only lose up to the amount of loss that we ourselves determine. This is also one of the advantages of leverage, but keep a very important point in mind. The use of leverage and the amount of leverage in relation to risk management is very important. As I've always said, leverage is a double-edged sword. It can really help you in some situations. It's a lever, but at other times, we can't lift more than 4 items with our hands. For example, a wheelbarrow acts as a lever. You can carry more things with less effort, right? Using leverage in the market works the same way. If you load a reasonable amount into that wheelbarrow, you can carry it with less effort and transport more items at once. But if you use it too much, even lifting and moving it, that wheelbarrow will hurt you more. Or if it tips over, it could cause all sorts of problems and even affect your health. The use of leverage, the amount of leverage you choose for your account from the start, and the type of trades you make with it. In each trade, what percentage of my capital should I put in? How much of my account can be affected depending on my leverage? These are very important points that are addressed in capital management. All right, so now in the trading section, we've become familiar with balance, equity, and free margin. In the terminal section here, if you forgot your leverage, you can see your leverage again from this section. There's an option for it. The account history tab is from this same session that we were working on together. If you remember, we had one buy trade and one sell trade. Look, one sell. See here, one interesting thing about MetaTrader is that every trade we make, or even any pending order we place and then delete, gets recorded in our account history. That is our trading history. Guys, it's kind of like a bank transaction. For example, if you receive 10,000 into your account and then make a 2,000 purchase, these transactions are recorded. No one can delete, erase, or undo any of their bank transactions. Similarly, in MetaTrader's account history, they always say you can see the overall character of a trader. For example, we were testing there, we took a buy on XAUUSD and closed it with a $2 loss. We tested a sell, closed it with a $2 loss. We tried different types, buy limit, sell limit, buy stop, sell stop. They were pending orders, we deleted them, and now it's empty here. Then we went to gold, took a buy, and closed it with a $20 profit. Here it shows that we exited gold with a $20 profit. So whatever happens, small or large trades, few or many, even opening and closing pending orders, everything is clearly visible in our account history. We can always refer to our account history. And in the section I mentioned, you can add comments. From here, you can activate that section. Right-click on it, and you can check the comment option. If we had left any comments on these, they would be displayed for us in the comment section here. Let me open another trade now because I want to add a comment to it. For example, I go to new order and add a comment. Let's say, for example, I write test. In my test, I came here with this hedge and placed a sell order. You see, whatever I do, the sell also closes. Okay, so I took this sell trade and it's running. For any reason, now I want to close it. I go into the terminal, to the trade section, and for example, I close this trade. I click on close order, right? When I go into the account history, I come to the last trade. See, the reason my last trade was on gold is written here in full in this section. This test displays this test for me here, and as I said, you can use it here. It tells you why I took these trades, what the strategy was, so you can refer to it here later. You can even use the comments here, the profits and losses you've made, to have a perspective in your trading journal so that you can always improve this strategy each time, review these weekly, or take some notes from them. Review them monthly, take some notes, and put these together as you start. Strengthen and reinforce your strategy with sample comments you can leave on the market. From this page, we right-click. You can view all history, show the last 3 months, the last month, or even a specific period. You can manually customize the time period. Choose from which date to which date you want to see in this history and select the part you want to save or get a report from, as well as in the form of command, text, commission, and so on. Now for the grid and other events that you need to see, you can enable or disable their checkboxes here. We've seen the trade section, we've seen the volume and the history. Guys, it's other sections like the news that's happening, the alerts you can set, the mailbox where you receive emails from your broker, and also the market section. In its market section, you can download indicators directly from the system as a main feature, and you can run them on it. There's also the journal, expert code, and code-based sections, each of which is used in more advanced work. When we want to do journaling based on robots or use code bases, or if we want to use expert robots, we can activate it this way. For the outputs related to the robot you've used and so on, you can use other options as well. So for us, trade and account history are the most important options in the terminal that we can refer to. So after the terminal and account history sections, in this part, we cover all topics such as setting stop loss, tick, etc. You became familiar with profit taking, the 2 types of manual entry into trades, instant, market order, and pending orders, which include the 4 types of limits and stops, as well as the different types of sell by limits and stops. And finally, with the entire account history, including lot size, leverage, stop loss, and take profit, which you can see here, and how you can analyze them in account history. In 2 ways, either through the chart or by entering the price, we can access it. We were able to see that it automatically calculates and displays the balance, equity, margin, free margin, margin level, and so on. It calculates everything and shows it to us. We just mentioned the formula once so that we know it. Otherwise, there's no need for us to calculate it every time. It performs all these calculations for us each time. It writes them out and gives them to us, and if we want to highlight a point or in a way encrypt it again for you, Let's look at it this way. As I mentioned, guys, regarding pending orders, meaning limit orders, let's review this point in this way. When we wanted to, the market was dropping and we expected it to bounce back from this level. In other words, the opposite of what a limit means, this is how we understood it. So when we say in terms of limit, out of the 4 types of pending orders, 2 are eliminated and 2 remain. Either it was a buy or a sell. Now, in which direction do I want to take this limit? It's coming down and I want to catch it going up, so I want to place a buy limit. Right? If I wanted to, when it was going up, I would say it's coming back down. So again, it's a reversal, it's a limit order. Which direction do I want to take it? Downward? Then it's a sell limit. And it's the same for stop orders as well. We point out that when the market was going up and I wanted to continue with it from a certain level, we said a stop order means a continuation order. Which direction is it going? Upward. Which direction do I want to go along with it? Upward. So what do? I add a buy stop here, right? What else do I want to do most of the time? For a sell stop, when the market is dropping, I say I want to join in from this range. When I want to join in and go along with a downward movement, then I need to take another stop order. What kind of stop is it? It's a sell in the direction of the drop, so I take a sell stop. Pay attention to these points. Memorize them so you can easily use these and so that at some point, confusion and ambiguity don't arise. Welcome to the future.